Good afternoon. Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Sylvia Jablonski. She is the Managing Director of the Capital Markets Division over at Direxion. Thank you so much for joining us again back at MarketSite.
Thanks for having me.
Direxion, known for your levered ETFs. Tell us a little bit about how investors can use levered ETFs in their portfolios.
Sure. Well, there's sort of different worlds of leverage. So on the highly tactical side, which is basically the 3 beta bull and bear product, an investor who has high conviction on a particular sector and has high conviction on volatility, meaning whether we're in a low volatile trending market or a range bound volatile market, can make a decision as to which index to invest in. So for example, if I have high conviction that this September 11th or 12th Apple announcement will be amazing, and I think that it'll move the overall sector itself, I might look at an ETF like TECL in the short term. So for every $100 you invest, you get 300 of exposure to the index. So the keys are essentially trend is your friend, short-term tactical trading, and actively monitor your positions. But they're great tools to generate alpha in the short term if you're on the right side of the trade.
Let's do an ETF sector roundup, if you will.
Okay.
Markets at all-time highs, right?
Yes.
And you had just mentioned tech. I think the Nasdaq Composite's up nearly 5% just in August
Yes.
alone, right?
Yes.
So what do you think? I mean, did it continue to be on a tear here?
Yeah, I read a pretty cool stat recently. It was that in the last 160 plus days, it's been up 1,000 points, and it's the second time that it's been up 1,000 points this year, which we haven't seen that since the late 90s, basically. You have Amazon getting into just about everything, increased analyst rankings and approval ratings on Amazon, on Google, on, Apple. You had Warren Buffett out there talking about it today on TV. So you have so much momentum in this sector, and there's this continued growth in artificial intelligence. There's this continued growth in cloud computing, the semiconductor names that are also sort of in these tech indices. And I think that, there's a lot of room to run as some of these trends in, again, gaming, cloud computing, technology, iPhones, Amazon, Google, all the different businesses that they get into continue to grow.
All right, and how about retail? I mean, consumer spending trends can't be any stronger than they are right now.
Yeah, exactly. So I think what we're seeing now is that the consumer seems to be relatively healthy. And, we saw that across the board with earnings announcements from sort of the lower end stores, like the, Targets of the world, and the higher end stores like Tiffany's. So, on the luxury side, you saw 7% growth in earnings there. And on the lower income side, you saw, mid-range, low range, you saw DSW, you saw Target, all of these names having, increased sales and revenues. And I think, it's a combination of, for now anyway, solid economy. Maybe some of the trading sanctions talk has been tempered with the Mexico deal. And a lot of these retailers, we kind of thought that retail might die out and it could be a complete, crisis and catastrophe. And what we see is that they're evolving actually. They're getting involved in online. They're paying attention to loyalty programs, discount programs, things that the end consumer really wants, and their online sales are picking up. So I think if they continue in that direction, we've definitely seen flows into our 3 beta retail ETF off of this. It's ticker RETL, and it's basically positive earnings from the lower to the higher end on the retail names.
All right, how about healthcare? Lots of corporate action in this space.
Yes, so there's a lot of M&A in the space. You've had the ongoing CVS Aetna deal, which, was sort of rumored and at this point expected to go through. You have a lot of M&A in the space. You have a lot of sort of positive momentum around Washington passing, the right to choose. So essentially, people with uncurable illnesses have the right to try experimental drugs. You have FDA pre-approvals and approvals increasing. You have a lot of these, sort of like offshore business with pharmaceuticals, biotech that, coming onshore, saving 10 to 15% in the bottom line corporate tax. So I think there's a lot of momentum in this space, and it's certainly one of the top performing GIC sectors of the year. So.
All right, let's wrap it up with the oil and gas sector.
Yeah, so oil and gas. So, today we sort of saw a pullback, but earlier in the week we saw a somewhat softening dollar. And, this sector in general has just been beaten up, so much. And I think that, if we look at Iran sanctions, Venezuela sanctions, and I think if we look at, just general OPEC steady supply and how badly the sector has been beat up, and perhaps a dollar softening in the near to longer term, there could be short-term opportunities there in oil and gas. They tend to be late cycle performers as well too. So we're definitely seeing people looking at, some of the and gas on some of these oil and gas related ETF products.
All right. Well, thank you very much for joining us at
Thank
MarketSite. We'll see what the narrative is like in Q4.
Yes, thank you so much.
No shortage of surprises.
That's right. Yep.
Thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.